Hello traders, it's Samurai Trader here. Welcome to this training session. In this session we're going to be recapping some trading opportunities that we had on the ES 233 volume chart on Wednesday the 16th of the 3rd. We're in the Globex session, so the after hours session. We've seen around 50,000 contracts change hands up till now. Normally on a normal day we'd probably see around 80 to 100,000 by now, but of course we've got a major red flag announcement, the FOMC announcement tomorrow morning early Australian time, later in the day USA time. However, I still tend to find there's still some great trading opportunities, and one of the advantages of these slower days for newer traders, it actually gives you the opportunity to think a little more about your trade entries and things like that. So we'll have a look at some of those. If you're new to my channel or my videos, please read the disclaimer in full, and it really comes down to don't trade with money that you can't afford to lose, or trade before you've learned how to trade. Let me get that right. It's been a long day. Learn how to trade correctly, and we're going to talk a little more about that in a moment. Please go to full screen, make it a little easier when we go to the charts, bottom right hand corner. So let's get right into this. I've just got 3 slides I want to cover before we go to the charts themselves. Traders, trading is not rocket science. It's only a pattern trading exercise, or really a pattern solving exercise, really I should have there. It's really looking for patterns, and after a period of time you get to learn those patterns. And I'm speaking to a gentleman, one of our members in the US today, and we were just talking about different markets have different personalities, and this particular gentleman likes trading Renko charts, and we're just talking about trading Renko on the NQ. And really they really do, you get to know the personality of the market. And so you've got to give yourself time, because there's a few things here that I really want to say. As you can see, I'm jumping ahead really quickly. I'm trying to get through this video. I can give you just about everything you need to become a profitable day trader, except for patience, discipline, focus, and screen time. Traders, patience, discipline, focus, it's really like a muscle. The more often you use it, the better you become at it. So patience and discipline particularly. And when we get down to the screen time is what teaches you, or where you start to recognize the patterns that appear in the market each and every day. Now, of course, in a moment we're going to be looking at the ES 233 tick. It doesn't matter what we're looking at on this chart. It could be Forex, it could be stocks. The same patterns appear in markets in all time frames each and every day. Patterns repeat themselves. So that is why I really highly recommend, for an example in this session, you take notes, and as you trade, or particularly as you're in sim as a new trader, take notes and you just start to discover patterns. Now before we go to the chart, what I want to say is this is a photo that I have on my desk. I consider myself a sniper when it comes to trading. Now let me read this out. I'm a day trader. As a day trader, I'm patient, I'm a sniper, one shot, one kill. I'm focused on the trade at hand. I'm a rules-based pattern trader using a combination of trend following, trend continuation, counter trend, and trend reversal strategies. So I'm using a range of strategies. Now what I'm about to show you on the chart here is a number of different strategies. I'm going to be showing you some counter trends, some trend following, and trend continuation. What is really important, traders, whether you're an experienced trader that's finding that really tough, or whether you're a brand new trader, you focus on 1 or 2 trend following strategies only. Now for my members, I know I sound like a broken record, but I'm the one that sees the emails and talks to traders every day that are having the challenges. And first of all, you've got to draw a line in the sand, go back to the sim if you're finding, back in simulation if you're trading real money and you're not making money, and let's start things over again. Now just before we go to the charts, if you're not already a member, for $197 you get my top 12 day trading and swing trading strategies. It's now over 30 hours of recorded trading sessions, cheat sheets, a ton of material. And of course, very soon we're launching our live trading room. We're not too far away. We just need a few more numbers, a few more members to do it, because the hours are upside down for me. I'm down under. So we're going to have a couple of other moderators working with us in running these live rooms where we're going to be calling trades in real time. So with that being said, let's have a look. Now, traders, there's a lot on the screen here. For an example, the indicator down the bottom, if you're not counter trend trading, you don't need to have that down there, our MACD. You can do without that, because what you want to do is have your chart as simple as possible. Now, for my members, you'll see there I've got the 21 EMA channel I've taken off just for simplicity, but let me run through some of the trades that you had here. Now, if we look here, when the market opened, have been after today's or last night's trading session, we had a T1 opportunity and away it went. We then had a T2, but one thing I'd like to mention, remember traders, the further away from the 34 EMA you are, the more likely you are to have a pullback to it. Now, I've got a comment down here, no divergence, some comfort to stay long. So when you see yourself moving right away, when you've got the bubble, I would say set it out. Really, it's a high risk trade. Wait until you come in, because you end up with over here, what have we got? Virtually a 34B. So you could have re-entered here or even here for a very nice 6 to 8 point trade, as this one was down here. So all of these were T2s. So traders, when you start to move away, fan away from the MAs, as you can see, wait until you get this pullback. Now I want to quickly talk about a couple of counter trend trades that we have. Now traders, please, as much as they look visually great what I'm about to show you, I highly recommend, until you're consistently profitable with your trend following trading, that you do not counter trend trade, because that is where most traders end up getting smashed. So if we look at this one up here, we had a T89. Now one of the really good indications that you're going to get a decent pullback on these is that when you get price moving away from our trigger line or our MA here, and you can see here, look at this gap, see how price is moving right away, and once price closes back over, we then have an entry, and this actually also is a T89. So it's a T89. One could say, look, is that divergent? Well, not really. We don't have it's really a double top, isn't it, here on our platinum? But then it fell away very nicely. But a really good indication, or really good signal, is when you see price moving away from the MA. Down here we had then a nice T20. Now on the ES, I like to have a stop of at least 6 ticks. Now if I had now I wasn't trading during the day today, but if I had entered this trade here at the close of this candle, we can see we've got a clear T20. That actually went up, was at 1 2 3 4. I was still 2 ticks well above this little pullback. So well and truly I would have been fine. You would have been mighty fine. Now on the NQ with these 20s, if you're trading the NQ or even the YM, I recommend you wait for the first pullback, which I call the T20-1, which is what we had right here. Why? Because it's not unusual for price to pull for a quick snap through, then pull up and then bounce. So what we also had here basically was a pivot bounce. So the T20 on the ES, I believe the T20s are fine for taking on the ES, jumping straight in. So you would have been fine on that one. The T20-1, very nice, thank you. We had a pivot bounce and a 34 bounce, thank you very much. And it's also a T2, as you can see there. So you got a combination of different entries. Now the only concern here is we're bouncing on the 89, and we know what quite often happens when we hit the 89, we get a decent bounce. Now we bounced up, but look where my long-term stoke was. Okay, so we had a T10 formation down here. We're oversold, a short-term come up, rolled over, and bang, thank you very much. So we punched straight through the 89 here. You look, that really, it's almost a T25. Now down here I've got here for a counter trend trade a gap. Just notice how price has barely moved away. You've had 3 candles move away. All right, and look at all these candles moving away. That is the difference. Yes, you could have scalped 2 or 3, but it's really just not worth taking these. And note down here, okay, you've got no real divergence or anything like that, so that really would have been a losing trade for you. And one other thing I want to really point up here, notice these areas of support on the opposite side here. So see here, if you draw trend lines, it's just amazing. You'll see bounces continually. So see these areas of support here. Look across here, we come down, we had a bounce. Over here, let me just scroll back, you can see here our low, and look at this low of the open. So the market open, we come down, and look at this low over here. Notice how we bounced on that low. Get used to drawing your trend lines in. That's if you don't mind clearing up your chart a little more, as you'll see these more often. Now if we move over here, let's have a look at a few other things here. We can see here we come up, we had a 34B, it turned into a T1, it turned into a T2, so very nice trade. So T20, thank you very much. 34 bounce, thank you very much. T25, thank you. And a 34B, thank you very much. We come down here, and what we've got down here is, let me just I just want to check something just to confirm it with you. Where's my raise channel? Let's just put that in. Okay, so we can see the channel there. We end up having, then it was a borderline T89. That's right, that's why I didn't mark it up. Remember with the T89, I like to see the entry outside the channel, right? And that's why that wasn't marked up there. And so we had one there, and we had a T89 right here. Now let's talk about this T20. You had a T20 entry here, and once again, notice how it went up, we had a retracement, and away we went. Same thing there. You'll see this day in, day out. Now I happen to have an alarm on one of my screens that when I have the crossover, it actually gives me an alarm. So I'm happy to enter in these as long as I use a 6-tick stop. Now there, once again, my stop was way down here. If let me just say this, I wasn't actually in on this trade, so let me just be truthful here, but my stop would have been down here for our T20, and then you had a secondary entry. Now remember our money management rules. I trade with 0.5% of my account, which means I can add to a position or up to 4 times. Our maximum rule, or our rule, is a maximum of 2%. That's the advantage of trading with a slightly larger account, and you can put multiple positions on. So I would have actually re-entered this. The T20-1 trades are really a rock solid trade, as you know. And once again, as I was saying to our member today overseas, is that on the NQ, I recommend you wait for your first pullback. So this actually ended up being a 34B. It ended up being a T10, so you had some great signals there. Over here we then had a very nice pivot bounce. This was also, now notice price moving away again. Okay, yes, it come up, a little bit of a stall, but this is what I mean about these gaps. When you see price action moving away from the mean, it's going to snap back, and then you saw a very nice snap back, as we saw there. Now here we then had a T20. Okay, so your entry was down here. Now I decided to enter this trade, and let me just put this on hold, and I'll pull the screen up for you. So I'm actually short on this trade. Now I actually didn't enter till over here. So I actually I was downstairs. My daughter's tutor's here from school, so I was downstairs with my daughter and the tutor going through a couple of things, come up and saw this beautiful setup, jumped in. Now time wise it's around 3 p.m. I wanted to punch down. Now as soon as it comes down and hits 4 ticks, so I'm short 10 contracts, I'm going to exit 5 at +4. I'll then go to break even, and the rest I'm going to run down. So I'm actually going to adjust my target down to the low of the day, because I believe we're going to come down and actually let me just lift at one target. Okay, so I'm one tick below the low of the day here. Okay, so in a moment I'm fairly confident it's going to come down. We can see here everything's rolled over here, plus I just got a nice T1 signal. So we want to roll down. We'll hit some come on, move. It'd just be nice if we delivered this while I'm recording this. So what I might do is just put this on hold for a sec, but before I do so, we had a classic T20. You would have been got your 4 ticks there. Then here is, you've come back up for a T20-1. So this is our first trade, our pullback. Now once again with your 6 tick stop, 1 2 3 4 5, your stop would have been up here, come up, nearly took you out, but you still would have been in this trade. So what I might do, traders, is and the timing, it's 5:05. So in the evening, so London, via London Open, we've got the a few things are happening in London, so we're bounced up here right now. So what I might do is just put this on hold and we'll come back to this. So I'm back to break even right now. So sometimes trading traders is a little bit like watching oil paint dry. Now the point here is as well is this has been really quite a slow day. Now for a new trader, that can be really good because you can just plod along. Now in fast-moving markets, as an example, last Friday we saw the ES turnover nearly close to 3 million contracts. NQ was incredible. So when you're trading those sorts of days, either stand aside, as if a market's too fast I'll just stand aside, or increase the time frame. So you go from, even on a day like that, you'd go from maybe a 1,000 volume up to a 2,000 volume. Likewise, when you're trading the FX market, you might go from a 5 range up to an 8 or even a 13 range. So just consider that. So traders, look, I'm going to wrap this up because I don't have the time to really sit around as I'm recording this, but fairly confident we're going to punch through. Everything's rolled over. Once again, you never know. You know, nothing's a certainty until you bank the money, but it's looking mighty good. As I mentioned, targeting, I'm going to target there, that's 7 ticks on the last 5 contracts, so 4 ticks on the first 5 contracts, 7 on my second lot of contracts. So it'll just be a nice start to the evening's trading. I really like trading the London session, and just another thing I want to mention is that the London session is great for trading the ES. You get some fantastic volume. Yes, you know, you got the Eurex stocks 50 and a few other markets there, but I really think it's hard to meet trading. It's hard to beat trading the ES. Now come on, deliver this. No, anyway, so you'll have to look at your charts, traders, and see how this trade went, because I do have to go. So traders, once again, if you're not a member, if you haven't invested in the Day Traders Fast Track program, I give you full email support. You get all of my trading setups. Doesn't matter whether you trade Forex, futures, or stocks. The Day Traders Fast Track program is for you. And of course, if you haven't already subscribed to my YouTube channel, please do, and I will see you on my next video.